All right, let's just jump right in. If you looked away from your screen for even a moment in the last 12 hours, you missed it. You missed a massive, brutal market shakedown. But you know what? It was probably a necessary one.
So picture this. It's 4 in the morning. The market doesn't sleep. And it's in moments just like these that portfolios are made or broken. For anyone using leverage, it was a complete and total wipeout. For the rest of us, it was a massive signal that the very structure of this market is shifting right under our feet.
$2 billion. That's how much got liquidated from leveraged long positions. Gone. In just a few hours, those positions were just vaporized, as Bitcoin absolutely took a nosedive. It even crashed below $81,000 for a moment before it finally found some kind of floor.
But listen, this wasn't just some random crash. What happened has a name. It has a purpose. We just saw a classic 4 a.m. liquidation, a cathartic purge of the entire system. Let's break down exactly what that means.
So a cathartic purge is basically when the market violently shakes out anyone who's overleveraged, anyone with weak hands. Yeah, it's painful and it's incredibly fast, but it's often the very thing that sets the stage for a new tactical bottom. The system is literally just cleansing itself of all the excess risk.
Now here's what's really interesting. We can actually quantify the blood in the streets. We are sitting at a fear and greed index of 11. That is deep in extreme fear territory. And while it's similar to last week, staying this low for this long, that signals outright panic. And as any seasoned trader knows, sustained panic is often a screaming buy signal.
Okay, so now let's pull back and look at the bigger picture. Because while the retail market is hitting the panic button, a huge, almost paradoxical narrative is unfolding. The institutional game is changing, and it is creating one massive contradiction.
On one hand, you've got nearly $4 billion gushing out of the quote-unquote safe Bitcoin ETFs just this month. This institutional selling is one of the main reasons for the sell-off. So the big money's running for the hills, right? Well, maybe not.
And this is where it gets crazy. This illustrates the contradiction perfectly. While money is fleeing the king, Bitcoin, the NYSE just opened the floodgates for high-risk altcoins. Grayscale's Dogecoin and XRP ETFs are launching this Monday. A brand new on-ramp for institutional money into the riskiest part of the crypto world is about to go live.
So where is all the money actually going? This isn't just theory. We can see this capital rotation happening in real time, and it is creating some very clear winners and losers across the board.
I mean, just look at this divergence. What we're seeing is a classic rotation into smaller cap coins that have strong, specific stories. Money's looking for refuge and privacy with Zcash, up over 18%. You've got a legacy name like Bitcoin Cash, up over 11%. But at the same time, all that speculative capital that was fueling recent high flyers like Aptos and ICP, it's rushing for the exits, causing them to bleed out and break key support levels.
The pain is really being felt most in the corporate treasury sector. I'm talking about companies that went all in on crypto. They are getting absolutely hammered. BitMine Immersion is staring down a massive $4 billion paper loss on its Ethereum bet. That is the confession from our title. And then you have MicroStrategy. Its stock has plummeted 68% from its peak, and now it's facing the very real risk of getting delisted from the MSCI index. That would force huge funds to sell their shares. This is a real structural risk we need to watch.
Okay, so that's the battlefield. The question now is, how do we navigate it? The next 48 hours are absolutely critical. And look, this isn't financial advice, but here is a playbook for surviving and maybe even thriving through this weekend.
I'm laser-focused on 3 things. First, that fear and greed index. Is this sustained extreme fear the bottom, or could it actually go lower? Second, BTC dominance. If this starts to drop from its current 58.4%, that is pure rocket fuel for altcoin season 2.0. And third, the health of those corporate treasuries. If the weakness there continues, it could signal a lot more systemic pain to come.
So this weekend is basically a powder keg. The landmine is the super low liquidity environment, right? A single big sell order from a whale could trigger another massive cascade down. But the rocket fuel is potent. Cathie Wood's ARK Invest is actively buying the dip in names like Coinbase, and traders are now pricing in a 71% chance of a Fed rate cut in December. That could just flood the market with liquidity.
So let's bring it all together. The message for the next 48 hours is really simple. Focus, understand where the money's flowing, and survive the weekend, because the game has totally changed.
This right here is the core narrative. The capital rotation is undeniable. Money is leaving the perceived safety of Bitcoin, and it is priming itself for the chaos and the opportunity of high-risk altcoins. And Monday's DOGE and XRP ETF launch, that's the starting pistol. You do not want to be on the wrong side of this move.
And that leaves us with the ultimate contrarian question, doesn't it? With the Fear and Greed Index literally screaming panic at a level of 11, have we hit that point of maximum pessimism? Is this the moment where you just stop analyzing and you start accumulating? I'll leave you with that. Stay sharp out there.